Well, hello and welcome everyone to the ESG panel hosted by Six. In this panel, we're going to explore the critical role of environmental, social, and corporate governance within the mining industry and why ESG has come to the forefront of increased attention. So I'm very pleased to welcome our panelists today. We have Bradley Barnett, VP Sustainability at Bunker Hill Mining, Lyle Triton, Manager of Development at Giga Metals, and Claudine Paget, Senior Director, Policy and Economics Branch, Lands and Minerals Sector at National Resource Canada of the Government of Canada. So before we get the discussion started, I want to remind you all that you can submit your questions on the Q&A panel on the right-hand side of the screen at any point during the discussion, and we will open the floor to the live Q&A afterwards. And as always, the summit is being recorded and will be available to watch afterwards on six.com. So to get things started, each panelist is going to take a deeper dive into the role ESG plays for their respective companies. So to kick things off, Lyle, I will pass it to you to go through ESG for Giga Metals.
Excellent. Thank you very much, Dasha. Pleasure to be here and looking forward to questions from our audience. To start with, as a public company, of course, we have to disclaim certain things. So, a standard disclaimer is in force. Giga Metals is a publicly listed junior mining company looking to help the world meet its global battery demand in the coming years by building a 37,000 ton per year nickel operation in northern British Columbia. We own that project outright at this time, and we're currently seeking strategic partners to advance that project through investment in it. And we're in the midst of additional exploration, geotechnical drilling, those sorts of things to move us to the next stage of engineering on the project. We think BC is a great mining jurisdiction. Canada overall is a great place to be a mining company, and especially when we talk about ESG practices, because we have such a good regulatory system here in Canada, as well as good standard practices that are enforced throughout the country. For us in northern BC, we've got access to deepwater Pacific ports to ship internationally, and of course to North American rail, simply down the highway from where the deposit is. And we have communities that are well experienced with the mining industry. That's nothing new in British Columbia. There's a lot of large scale mining there today, as well as smaller scale mining for more precious metals. We're focused on nickel because it's really the fastest and most important growing segment for lithium-ion batteries. The high demand for nickel is really coming from that sector where nickel really helps store the energy needed for the high-capacity batteries that we all want in electric vehicles. The forecast from the International Energy Agency could mean 50 to 70 new large nickel mines by 2040. And that's a very tough ask for us in the industry. Our priorities, at Giga Metals on ESG really revolve around tailings, critical issue for us in the industry, making sure that we have a low carbon footprint. We don't want to be trying to solve the world's carbon problem by creating a lot more carbon emissions to the atmosphere. Managing and minimizing our ecosystem impacts, that's both land and water impacts, looking at both the flora and the fauna in the area. Ensuring that we have great community relationships and being transparent about what we do. The key to corporate governance is transparency. On the tailings side, we have an efficient valley location, which means we don't have to build ring dikes around all of our tailings. That minimizes the construction and allows us to develop a dam using centerline construction instead of the more common upstream construction methods that have been used in the industry and which have been one of the factors in some of the failures that we've seen internationally in the last decade. We plan to deposit our tailings using a dry beach approach as opposed to having a full submerged tailings. Keeping water away from the tailings dam enhances our safety. And for us, it promotes CO2 capture. And I'll talk more about that in just a minute. And we've got an area with very low seismic risks. It's not like we're in the Ring of Fire, kind of the island nations and stuff, with an excellent water balance in northern BC. So nickel processing is typically pretty carbon intensive. Sulfide projects in general, such as we have in Canada, in Ontario, Quebec, Newfoundland, Manitoba, are lower carbon intensity by their nature than laterite projects, such as we have in Indonesia, the Philippines, New Caledonia, because that sulfur is part of the fuel for smelting it. And that makes a difference. And so the data here from the IEA clearly shows sort of the normal specter that we see within the industry. And most of the growth in the industry in the last decade has been on the right-hand side, production of nickel pig iron from laterite ores. We looked at this pretty intensively in our preliminary economic assessment that we completed last year, and came up with a base case of 2.24 tons of CO2 per ton of nickel to produce our product, nickel concentrate, at the gate. That's very low on the global scale, but that doesn't take account of two of the main features of our project. Being that we're running on clean BC hydropower, we're looking forward to having an electrified mining fleet in the future as that equipment becomes developed and available from the manufacturers, which could reduce our emissions from our site for Scope 1 and Scope 2 to 0.7 tons per ton. And then the sequestration of CO2 in our tailings, which is a geological reaction, could reduce us to below zero. So we're working hard on that, at understanding how much CO2 we can sequester and how best to do it. Our pathway to zero, as we like to think of it, starts by acknowledging both our Scope 1 and Scope 2 emissions, Scope 1 being the emissions directly from fossil fuels and other sources at our process plant, Scope 2 from the hydroelectric power that we import from the BC grid, and then deducting from that the CO2 that we sequester in the tailings. And so that's ongoing research at the University of British Columbia. And we're focused right now on understanding that and maximizing it as we go forward. And there are some interesting things that we can do with that. So, to bring this all together, we believe that as a project today and a mine eventually, that we have really focused on having those responsible mining credentials right from the design process on. A modern tailings facility with centerline design using for ground rock tailings, not precipitated chemical tailings, a low carbon footprint. We're operating in the taiga ecosystem, which has much lower impact on an area basis than, say, tropical rainforests or temperate forests. We expect to have an excellent water balance that we can control to have very little to no effluent through the majority of the mine life. And we're relying on, Canada's great new permitting system that covers both environmental and social aspects to really demonstrate the credentials of our project, and work with our communities, who are mining-friendly communities that typically sign impact benefit agreements with mines in their area, to ensure that everybody is benefiting from our project. So I'll close it there, Dasha, and pass it back over.
Great. Thank you so much, Lyle. I'll pass the torch over to Claudine.
Sure.
Claudine, go ahead. You can walk us through the presentation. Okay. Thank you.
Thanks, Sasha. So my name is Claudine Paget. I'm the Senior Director at Natural Resources in the team that looks after basically Canada's metals and minerals sector in a nutshell. So we're responsible for policies and initiatives that directly impact the sector. And right now it's a very prominent sector as we think about the low carbon economy in particular, and what this will mean for demand of minerals and metals. So obviously the sector, as Lyle noted, is very competitive and well regarded throughout the world. We know there's a growing demand for some of the commodities where we already have a bit of an advantage, like copper, nickel, obviously, and some cobalt. And we're also host to a number of advanced rare earth elements projects, and also lithium and graphite. We already have a number of key assets that are very positive in the ESG context. In particular, the participation of Indigenous people. It's the largest employer of private employer of Indigenous people, with over 16,000, representing about 12% of the mining labor force. So just to do a bit of a recap, so what essentially is the role of the government of Canada in the context of ESG is fairly large. But in a nutshell, I think I would say basically our responsibility is to establish the policies and support the operating environment that basically strengthens the ESG attractiveness of Canadian companies and Canada overall for investments. We also influence the standards globally that determine how Canadian firms will be measured on ESG metrics relative to competitors. And we work closely in collaboration with international partners, provinces and territories, and other stakeholders and Indigenous peoples to continue improving the outlook for ESG in Canada at home and abroad. So there's a number of initiatives ongoing, and I just wanted to highlight a few things that might be more of interest. So in terms of the broader Government of Canada initiatives, you might have heard that there was a panel of experts around 2019 that convened to talk about sustainable finance. And they came up, including our current governor of the Bank of Canada, and they came up with a number of recommendations, which included setting up a Sustainable Finance Action Council. And this was launched this May, so it's very recent, and will feature financial sector leaders that are providing advice on how to build the sustainable finance market infrastructure in Canada, how to mainstream sustainable finance, and work towards inclusivity and other important features of ESG. There's also the federal green bond program, with the first issuance expected soon for 2021-2022. So that's basically around $5 billion that will be focused on green infrastructure investments and other projects to support the move towards low carbon economy. There was also endorsement of the Task Force on Climate-Related Financial Disclosure Framework that was part of Budget 2019. So basically to support the phased adoption by major Canadian companies and some Crown corporations. And finally, the Department of Finance is very active in representing Canada and leading sustainable finance engagement with the G7, the G20 finance ministers, as well as the OECD Committee on Financial Markets. And there's a lot of discussions right now leading up to COP26 in November. So this issue will be quite prominent in those discussions. So Natural Resources Canada, along with some of our partner departments, including Global Affairs Canada, we work together on some initiatives that are international and have some important impacts on the operating environment for mining. So including the OECD's Responsible Business Conduct Initiative, the Extractive Industries Transparency Initiative, as well as the Extractive Sector Transparency Measures Act, which Natural Resources is responsible for. So in terms of where Natural Resources Canada is making some progress or trying to advance elements that will have an impact on ESG, here's a few listed there. So we're doing a lot of work supporting industrial decarbonization and clean tech. So there's a number of programs that are under construction or have been announced, including on clean fuels, on carbon capture, and also working with other departments like Innovation, Science, and Economic Development Canada on, for example, the Net Zero Accelerator, which is part of the Strategic Innovation Fund. So a lot of funds are flowing through there. We're also doing quite a bit of work supporting Indigenous participation and equity and inclusion in the natural resources sector. So for example, working on UNDRIP legislation and now on how the implementation will be undertaken with our friends at Crown and Indigenous Relations and also Justice Canada, as well as the provinces and territories. We're also contributing some expertise to the development of transition finance taxonomy, which is being led by the CSA, which will be important in the transition to low carbon, especially for large emitters. We also publish quite a bit of ESG relevant data for all the sectors. So for forestry, oil and gas, obviously minerals and mining as well. And more importantly, relevant to my team in particular, we're leading and implementing the Canadian Minerals and Metals Plan, which is basically the vision for the mining and minerals sector in Canada for the next few decades. And we're working really, really closely with provinces and territories on that, as well as a number of stakeholders. The department also supports the sector through regulatory instruments, which are important in ensuring the good governance of the sector overall. So just a little bit of a recap on the Canadian Minerals and Metals Plan. So as I mentioned, that's a pan-Canadian plan. It focuses on 6 strategic directions. And in terms of the connections to ESG, we are doing quite a bit of work on the environmental front, working on initiatives and policy development to continue building public trust and social license for mining projects. Also working on developing low footprint mines and managing the legacy of past mining activities, in particular with our CanMet mining colleagues who are involved in quite a bit of research and development on for mining. We're also working to create a more diverse workforce that meets the needs of the mining industry and also sets an aspirational target for more women participating in the sector, so 30% by 2030. And advancing the participation of Indigenous people is very central as well to the plan, and in particular helping Indigenous women make sure that they are part of the economic development through collaborative approaches that really can generate some tangible benefits for communities in particular. And also more broadly with communities, we are working with them on readiness for mining projects, especially in areas like governance, decision-making, employment, and business development and skills development, where we can work with also other departments in the Government of Canada. So mining and minerals and metals, very central to the policy agenda, and something where we need to continue working together to make sure the ESG evolution supports the sector and really puts us in a competitive advantage. So that's it for me. Thanks.
Great, thank you so much. So I'll pass it over to Bradley for Bunker Hill.
Thank you, Daisha. Bunker Hill has launched an ESG brand in the mining sector. We're starting with the reboot of Bunker Hill Mine in the Silver Valley in Idaho of the United States. The team that's driving that is myself and 2 of my ex-Barrick colleagues. Richard Williams, our chairman, he was the COO of Barrick for several years. Sam Ash is our CEO. He was a general manager of Lumwana Copper, which was one of Barrick's most challenging mines. He led an extremely successful turnaround in Zambia. And after our time at Barrick, we started to ask ourselves, well, where do we see ourselves working in the future? And confirming that, number one, we believe that as a team, we could do something pretty exciting, but we wanted to spend some time really defining the area of opportunity. And as we did that, we added another critical piece of our team, David Weens, our CFO, who is a great cultural fit, but brings capital markets experience and extensive investment banking experience. Before getting into some of the things that as team builders and doers, we eventually went on to do over the course of the last 15 months, I wanted to spend a little bit of time talking about why are we doing all of these things. And One of the things that I took out of my experience as the head of closure with a focus on redevelopment at Barrick is that across the Western United States, there is a huge landscape of opportunity, and it arises really out of that critical difference that we see in the way that mining as a business closes its operations. It's fundamentally different from the way that almost any other business shutters. And in general, I mean, it isn't as simple as just removing some hazardous materials in a proper disposal process and calling it a day. When you start acid mine drainage as a process, it continues on often beyond, decades and decades and even into centuries. So these are issues that environmentally, as a society, obviously need to be taken very seriously, but mines in general are highly vulnerable to unforeseen changes in market circumstances. And because those things happen unexpectedly, proper planning for closure of these activities is not often undertaken in the best possible way. That ends up transferring a whole bunch of negative externalities onto society as a whole. But we see that some of these changes have come at very specific points in our past, especially in the Western United States, where for most of the 20th century, the United States was a leader in minerals and metals production. But then as we saw regulatory evolution with the Clean Water Act and eventually the Superfund Act, or CERCLA, in the 1970s and 80s, you start to see a rapid, widespread closure of many, many mines around the Western United States. But therein lies both a challenge and a problem that needs to be addressed, but also a huge opportunity. And the reality is that the technological constraints that existed at the time of those closures meant that they were mining at cutoff grades that by today's standards are extremely attractive. And so when we started to look around at the opportunities that we felt fit that mold, we saw a few common characteristics. We see that a lot of these environmental challenges that existed and still exist today through the benefit of technological evolution now can be dealt with in really cost-effective, efficient manners. We see that a lot of these, as I explained a second ago, a lot of these mines have remaining mineral endowments that allow for long life production upon restart. We see that a lot of these mines have reusable infrastructure that not only allows for a more rapid restart timeline, but it also means that you don't have to create great surface disturbance in other locations to start new mines, which has social benefits. Almost without exception, around the areas of closed mines, you see that the communities that once used to depend on these activities and thrive are now economically challenged. And so we see that in seizing these opportunities, addressing these challenges, we have the opportunity to provide real sustainable solutions that will also provide our investors with solid business performance, and we believe lead to overall better mining practice as an industry. Bunker Hill really is the proof of this investment thesis. And so some of the things that we did after arriving on the scene, the new management team started in March of 2020, was because the mine, as many of these mines closed in the 70s, 80s, and 90s, that occurred before the advent of NI 43-101 and JORC. We needed to bring a lot of the historical mining records and existing resources into modern compliance, which is what we started with in March of 2020. But almost right on the heels of that, as a major priority, we initiated a weekly call with our environmental regulators to make sure that everybody was on the same page and all of the actions that we would begin to take, making environmental management a major priority for both the company and the operations in and around the mine, ended up taking place in ways that were meaningful to all of the major stakeholders. And so we speak to the EPA's Superfund team here at the Bunker Hill Superfund site on a weekly basis, in addition to the Idaho Department of Environmental Quality. We went on to later publish our inferred resource In August of 2020, we embarked on a widespread water management program, which led to the commissioning of an in-mine water treatment pilot program that allow us to generate major efficiencies in the drive towards our own water discharge permit. We then published a water quality tracking platform. That's part of an initiative that is aimed to provide our stakeholders with the maximum degree of transparency, allow them to engage in a vibrant and active dialogue, and to start to build trust as a relationship building tool. We went on later to update our resource through additional drilling. We recently published in April our preliminary economic assessment that outlines the plan for Bunker Hill's restart. And in May, we launched a sponsored research program with the University of Idaho to start to map out ways to limit water infiltration into the mine as a measure to limit the future environmental management challenge here at Bunker Hill. So the work that we will undertake in the future, we are currently raising capital for this restart. That's a process we anticipate will wrap up in the course of the next 2 months. That'll lead into a variety of initiatives. One is a local workforce training. We've committed to 90% local employment, and in this case, that means Shoshone County and Kootenai County. We're going to need to work with local suppliers of other services and materials to make sure that they can hit specs for all a variety of our different needs that are outlined in our PEA, make sure that they're competitive and cost efficient. We'll be participating in the broader real estate development in the Superfund site over the course of the next year and beyond. And that's a big part of the initiative to make sure that the positive economic impacts that Bunker Hill generates are felt way beyond just the mine itself and extend well beyond what we believe will be multiple decades of productive life of the mine, but propel into the 22nd century and beyond. We'll begin commercial production in 2023, and as that occurs, we then have a paste production in our processing that becomes major part of the environmental solution at Bunker Hill, which currently discharges water of poor quality that's treated across the street from the mine at the EPA's owned central treatment plant before it discharges into the South Fork of the Coeur d'Alene River. But the solution here is to generate paste that will choke off all of the sulfide ore bodies and make sure that there is no acid mine drainage production in the first place. That'll be good news for the residents of Shoshone County and mining communities as we transport lessons learned into additional projects. Thank you, Daisha.
Great, thank you. Thank you so much. All right, I would love to jump into the discussion. How and why does ESG impact the mining industry specifically? Lyle, I'll start with you.
So really, I look at this as there's two major routes that it impacts us. Certainly our stakeholders care. Local stakeholders are directly impacted by our ESG practices. Shareholders, many shareholders want to invest in companies with good ESG records, which might be different than practices. Working with regulators becomes easier when you can demonstrate that you've got good ESG practices. So those all matter, but there's also, we have to recognize a financial impact to the company as well in the ESG world. And it's really twofold. Some of the top tier ESG practices can cost more than operating a business differently. Some of them can actually be cost effective and save you money in the long run. You know, just look at Samarco and some of the other companies in Brazil and the difficulties and liabilities they're facing over their tailings failures. And you see pretty quickly that, you know, in the long term, good practices can pay off. But one of the other factors that people don't recognize it as much perhaps is that with right now the proliferation of ESG reporting formats and systems and practices globally, whether they're coming from the financial industry or out of sort of an NGO type industry, compliance with multiple systems costs you money too, right? It costs you effort and resources and time and focus that you might want to be spending on actually doing things in the field rather than filling out paperwork. So, there's sort of a twofold impact there.
All right, thank you. Bradley, anything to add?
Well, I think the most direct positive impact is just much better risk management across the board, which any business needs and any investor would want. Ultimately, I think that some of the direct outcomes of better ESG implementation are just increased levels of trust through better information, better dialogue. And I think ultimately that lands the mining industry in a position of having easier, faster, better permitting of new projects and restart of brownfields.
Absolutely. Claudine, what are your thoughts?
Well, I think from my perspective, there is definitely a little bit of confusion out there in terms of all the standards that exist and, what will emerge in terms of something that can be used as a benchmark and how will companies be compared. And I think that we hear a lot about that aspect in particular. I think also companies will need to think about all these different metrics that they will need to measure and how they will go about that. Emissions intensity, GHG reduction efforts. We don't have a ton of data available right now, but we need to build that capacity to then be able to demonstrate how Canada is making progress. And so I guess essentially, it's not just about having good financial statements. It's really how you produce and how you partner with others. So it's very much looking at it differently. But at the same time, I think the mining sector's done considerable strides in the recent past, including through the Mining Association of Canada, the Towards Sustainable Mining, and also the Prospectors and Developers Association of Canada through their E3 Plus approach. So I think, we've done a lot of thinking of all that, and it's a matter now of making it into a comprehensive approach. So definitely pushing the limits a little bit more on those aspects and figuring out how best to report and position companies in the future.
Great. Yeah, we'll talk more about that. There's some questions that came in for you. But so the EU recently announced sweeping new climate measures, including a carbon border adjustment mechanism. What does that mean for Canadian metals production? I'm going to throw it back to you, Claudine.
Okay, well, thanks for that one. And yes, so part of our team looks at the policies of other countries. We're always very keen to see what's going on in our big markets, and especially the EU, who can influence regulatory decisions in other countries. So basically, this mechanism, the EU Carbon Border Adjustment Mechanism, was just recently announced, and it's part of the wider Fit for 55 climate and energy package that the European Union has put forward. So there's a few things for us to keep in mind in terms of what it could mean for Canadian minerals and metals production. So obviously, the increased importance for industry to be carbon competitive. So in order to be able to attract investments and target new markets as well. So they'll have to be much more ready to be able to respond to those kinds of requirements. And there's also the potential for eventual price premiums on commodities with lower embedded emissions. So, that's an opportunity where we can increase our competitiveness. And there's also there will also be some increased need to develop traceability and be able to trace commodities back to their production. So we're still, going over the proposal and what it can mean and the fine details of that. And right now it's open for comment. So the European Commission has a public consultations portal that everyone can access, and comments are open until September 10th. So we continue working with stakeholders and other government departments to be ready to respond. But some other key sort of process points are that there's going to be a 3-year transition. So from 2023 to 2026, where only the reporting requirements will be foreseen. And then it will really start by covering certain industries. So they're really targeting cement, electricity, fertilizers, iron and steel, as well as aluminum. And only direct emissions, so not indirect emissions from electricity inputs, for example. So it would also recognize the carbon prices that are already in effect in exporting markets. So that's good news for Canada. So from the short term, we think aluminum might be the most sort of implicated in the short-term impacts here, where about 98% of the value of in-scope Canadian exports to the EU. So that's about $970 million per year. So under the current design of the mechanism, it might have limited impacts overall on Canadian exports, especially in the short term. But those impacts in the longer term might have increases because of the scope of the products when it's going to start applying to more products. And when, so anyways, overall, it does send a really strong market signal in terms of increased scrutiny and regulatory requirements around this. So that, if we're looking to make investments in terms of carbon competitiveness, there will be some market opportunities as well. So it's kind of looking at it from both sides. What does it mean in the short term? But in the long term, if we're able to really be carbon competitive and also, meet our domestic requirements now, it does open the door to some positive impacts as well.
Great, thank you so much. Bradley, what are some of the ESG related initiatives Bunker Hill has led in the past?
Well, we're just starting the whole reboot process of Bunker Hill, and the new management team arrived on the scene in March 2020. But as I described a little bit in the slides, one of the things that we wanted to do right away was to increase the dialogue and start to build the relationship with the whole ecosystem of stakeholders. Obviously, we need to get to know them. We just arrived on the scene, but we want to do it in the right way. And the team, Richard, Sam, myself, and David, all believe that transparency and accountability is a huge part of that. And so one of the things that we did was put a water quality tracking platform on our website that gives stakeholders free access to real-time information about the water that leaves the Kellogg tunnel, which is the single point of discharge from the Bunker Hill mine. Gives them key data points, but if they want more detailed chemical information and a whole variety of other metrics, we do collect water samples every 2 weeks from 30 different locations, both in and around the mine. And we have also published that on our website as an interactive database for stakeholders to play around with, get familiar with the environmental dynamism and specifics of the site, and to try and inspire some dialogue and build understanding and trust with that as a main tool.
That's great, thank you. And Lyle, what about for Giga Metals?
Well, we've been operating in northern BC for quite some time, and ESG has always been top of mind for us. Working with the local communities, critically important, but not dictating to them how we work with them. involving them in our discussions and making sure they're informed. As Bradley said, that transparency is critically important because that's how you build trust, and trust is how you get that social acceptance that we're all looking for. Over the last several years, we've been focused quite intensively on the carbon footprint piece, especially the carbon sequestration that we have going on. Our minerals are quite reactive with CO2, and if we wanted to put enough energy into it, if you grind it fine enough and subject it to pure CO2 at high pressure and temperature, you can sequester 0.5 ton of CO2 per ton of tailings in our material. That's not the route we're going, because at this point in time, it's not a cost-effective route. But the passive sequestration that we're now working on with the University of British Columbia can sequester, a couple of kilograms per ton through exposure of those minerals in the proper manner with the right moisture content to the atmosphere. And it just happens naturally all the time. And so understanding that process better and how to maximize that is really key for us right now. Of course, we've been focused on how we manage our tailings properly right from the beginning. Every PEA that we've done has focused on that, because it's, for a low-grade deposit like Turnagain, there's going to be a lot of tailings, and they have to be managed properly, right? And we understand and accept that right from the get-go.
Great, thank you. Just my last one here for you, Claudine, and then we're going to open the floor to attendee questions because there are a lot of them and I want to leave some time. So, but Claudine, do you see a time when there will be agreed ESG standards that apply across the globe, like financial reporting standards? And if so, would it be a universally good thing?
Yeah, that's a really good question, because that's a question we get asked by a number of our stakeholders. And I think right now, Canada has a lot of opportunity to play a leadership role on this. We're really trying to be proactive to think through with industry what would make the most sense. And also, as I mentioned before, working through the recommendations of the panel and now the new Action Council. I think there would be some great merit in having more standardization so that people can actually figure out what they should be meeting. But I think for a global standard to be effective and beneficial, Canada really needs to participate in designing it and in making sure that it's something that's implementable and that's really reflective of the areas that Canada values as well for measurement and performance on the ESG front. So we know that also the Chartered Professional Accountants of Canada also agree that right now it's very fragmented and confusing. Companies kind of, some of them don't know where to start or stop, and there's lots of ambition in the climate agenda, including for governments to be able to keep track of what we're doing and also reporting. So, for example, through the Net Zero Emissions Bill and the Climate Accountability Framework, as a country, we'll have to do much more reporting, but we also have to think through how industry will be able to report in a way that's fair and transparent, and that allows them to know where they stand when comparing themselves to other companies and being able to play at their advantages in terms of getting some reward basically for being a good performer on these new areas that are now becoming really important. So I do see a demand for a more streamlining, definitely. If it's one standard or how that would work exactly, I think that's the process that we're going through right now to see what would make the most sense. But definitely there needs to be a better grasp in terms of what this means and how it's applied.
Great. Yeah, I think that actually feeds really well into Karem's question here, asking if the NRC is working towards guidelines on how to measure ESG performance for these companies. For example, he's saying a company such as Giga Metals should benefit from its product, nickel, towards the environmental side of ESG credits.
So that's the question for me. So NRC, they're clearly our partners in terms of research and development. So I think right now there's a lot of focus on, okay, we've set the agenda, we've set the measures that we hope to pursue, but now we have to figure out exactly how all of this will work. So for example, Environment and Climate Change Canada are working on the Net Zero Challenge, which is an approach that was announced in the budget in April, in terms of how do we help companies set their net zero plans, and that very much includes how they will measure their CO2 emissions and how they will be asked to report about that. So it's very much a work in progress, I would say, in terms of how we will work together to actually come to an agreement of how we measure this. It's relevant to other programs we've put forward in terms of ensuring that stakeholders and proponents that receive funding are able to be, we're able to calculate their emission reductions. So I don't have much to add at this point, but it's definitely something that technically we have to grapple with and communicate.
Great, thank you. This next question, I believe, is for Lyle because it came up during your presentation, but Richard is asking if you can explain the CO2 tailings sequestration potential a little bit more, just the basics. Sure,
and it really is an inherent feature of our deposit. Some minerals that exist in the earth, and primarily these are the ultramafic minerals that host our nickel sulfide deposit, are naturally reactive with carbon dioxide. They contain magnesium that when exposed to water and carbon dioxide the magnesium will dissolve a little bit, it will react with the CO2 from the air and make magnesium carbonate, a different mineral that's geologically stable. Thousands, tens, hundreds of thousands of years, it will sit there. So it's not like a sequestration in, say, a forest type environment or soil carbon. Also, those are good, but they are perhaps more time limited. Different minerals within the deposit have different reaction rates. Brucite is the most reactive of the minerals. Serpentine is reactive. Olivine is less reactive. But as we expose those in our tailings facility, and this is one of the keys of having a dry beach facility instead of a submerged tailings, those minerals are exposed to the air. They come out of the tailings process wet. So they're already primed for reaction right at the get-go. And then we're focused on ensuring that we get the maximum uptake of CO2 into those minerals by, for example, agitating them a little bit. There's some things you can do with stirring the tailings facility. It's hard to imagine on 1,000-hectare scale, but it's kind of like tilling a farm field, where you can re-expose tailings and improve the capacity. And some of the research that we've just completed at UBC shows a significant increase for the churning process, as we call it, of the tailings. It can be 25% or more more reactive than just leaving a pile sit there and react.
Thank you. Bradley, this is a question for you. Richard is asking, how will Bunker Hill measure and reduce its GHG emissions on Scope 1 and 2?
Well, I think it starts, Daisha, just with running the mine on all electric power. We'll source clean hydropower. Lyle mentioned that earlier in his presentation. Idaho and the surrounding states do a good job of providing hydropower to those who want to source it. That's our plan. As a result, our carbon footprint is very small. There are opportunities in the surrounding environment, similar, I imagine, to Lyle's project. We're in an area that's pretty heavily forested, and so there is a lot of opportunity to engage in agroforestry and to do some carbon sequestration and harvest some credits that way. In general, our 90% of our carbon footprint will be really just the transport of our concentrates to smelters. We're in commercial discussions, so the exact distance and exact magnitude of that carbon footprint is unknown. But if we were to reach agreement with the smelter in closest proximity, It's only about 250 miles from our mine. Either way, we will be purchasing offsets for that footprint to reach carbon neutrality from the get-go.
Great, thank you. Barry is asking what the difference is between green credits and carbon credits. He says, could a sewage treatment plant gain credits in the new market, or would this market only involve carbon? And just asking if you all could explain this new system. This is an open question.
I'll jump in quickly here. I don't know of anything specifically called green credits. We're really focused on carbon credits specifically. That's the big thing in the industry. There has been some work internationally on developing similar credit systems for other parameters of interest, but it really hasn't gotten very far yet. So all the work right now is on carbon dioxide and its equivalents, methane and nitrous oxide and such.
Anything to add?
Oh, I'm sorry, Daisha. Yeah, I'm not qualified to comment on that one.
Perfect.
But, Dasha, just to be clear, something like a sewage treatment plant, waste treatment and sewage treatment often emit methane from their process. And a lot of facilities are starting to now capture that methane and utilize it to produce power and reduce, therefore, the emissions, because CO2 is a much less potent greenhouse gas than methane. And a lot of waste treatment facilities are now generating carbon credits from that process of capturing byproduct methane.
Okay, thank you. So this next question from Barry is the Canadian government getting into the business of investing in mining similar to China? I believe this is a question for you, Claudine.
Thanks, Dasha. So personally, I would think it would be great if we could invest in directly in mining. I would be very supportive in terms of certain projects, but that's not exactly the same system. So we're kind of comparing apples to oranges, but we're very much looking at, for example, right now, critical minerals are very high on the priority list in terms of those metals and minerals that will be key in supplying the value chains that will be, central to developing new technologies for the low carbon economy. So in particular, right now, we're looking quite a bit, for example, at the mines to mobility value chains. So basically from mining all the way to zero emission vehicles. There's been quite a few announcements around that. Obviously, Canada is trying to develop their battery value chain and what that could mean in terms of business opportunities here. So we have the mines, we have a lot of capacity, but there's areas where we need to fill in some of the gaps. So we're very much, for example, focusing on the Net Zero Accelerator Strategic Investment Fund in terms of supporting certain initiatives and seeing how we could accelerate a little bit the development of that value chain, for example, in Canada. So it's very much looking a little bit more at our industrial policy and thinking towards the future and what Canada wants to play in terms of role in those new technologies and those new markets. So it's difficult to do a direct comparison to other countries with that respect, but I think Canada's approach is very much in terms of setting some desired outcomes and means by which proponents of projects that fit within those outcomes can apply for funding and lead towards those new industries that we see emerging quite quickly and hopefully working with other allied countries like the US in particular to spearhead some initiatives. Transportation is a really significant source of emissions. In the US, it's a huge source. So we all have a similar interest to try to bolster battery production in North America and advance some of those initiatives, as well as other other value chains where critical minerals are key, for example, for the production of semiconductors and all sorts of applications. So, and we're looking at research and development. Obviously, that's a really important component, but our recent budget had some features in terms of supporting research and development for critical minerals, where we need to develop our capacity for processing, for example. So that's more the approach that we're taking at this point.
Great. Thank you so much. We do have...
Dasha, can I just add to that for a second?
Yeah, of course.
I think there's a couple of key things there. The government's role is mostly in creating the right conditions and in sponsoring R&D to enable future projects, future technologies to be implemented. But one of the areas where governments in the West sometimes do get involved is in the development of supporting infrastructure on a regional basis. So, for example, for Giga Metals, in British Columbia, the Northwest Transmission Line that extended the British Columbia grid partway up towards our project was partially funded by 2 levels of government. And it needs to be extended further, and that's an area where there might be some potential support in the future. But we are seeing Western countries now investing, for example, in battery manufacturing plants. So if we're going to invest in making the batteries, maybe we should be thinking about that whole value chain as a government, all the Western governments in Europe and Canada and the US. The battery plants don't really do us any good if we can't feed them, right? And so if we're going to invest in those, maybe we should really think about investing in the whole value chain itself.
Great, thank you. So we do have some questions left, but we are running out of time. So what I will do after this is just forward all the questions that we have here to the appropriate panelists to answer. So all of your questions will be answered after the session. Thank you everyone for joining and submitting all these great questions. And thank you, of course, to our great panelists for your insight. And for joining us today. This session is obviously recorded and will be available to watch afterwards on 6.com. And stay tuned for other responses to the rest of your questions. So thank you all so much.